Welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today, July 30th, 2025, we're tackling one of the most talked about stocks, Tesla, ticker symbol Tesla. We'll be breaking down the latest news, correlating it with the raw chart data, and discussing key price levels and trading opportunities. First, let's look at the headlines impacting Tesla recently. The company has been under a microscope following its Q2 2025 earnings, which, while showing a strong quarter-over-quarter increase in revenue and EPS, saw significant year-over-year declines in profitability. Specifically, net income was down over 52% and EPS also fell more than 52% compared to Q2 last year, despite revenue remaining flat year-over-year at $22.5 billion. This indicates considerable pressure on margins and overall profitability. Compounding this, Tesla reported a second consecutive quarter of declining auto sales and a 14% year-over-year slide in vehicle deliveries to 384,000 units. This is a major concern for a company built on a growth narrative, and new car registrations in Europe also declined. CEO Elon Musk himself predicted a few rough quarters ahead, citing the intensifying competition in crucial markets like China and Europe, especially from lower-cost EV players, and the impending expiration of the federal $7,500 EV tax credit at the end of September. Now for some positive developments. Just recently, South Korea's LG Energy Solution reportedly signed a substantial $4.3 billion battery deal with Tesla, which is a significant vote of confidence in Tesla's future production capabilities and supply chain. Additionally, ARK Invest founder Cathie Wood viewed the recent downturn as a buying opportunity, which often encourages other investors. Tesla has also started limited production of a more affordable EV model in June, with plans to ramp up in the second half of the year, a move aimed at addressing the increasing competition in the lower-cost segment. These mixed fundamental signals create a complex picture for traders and investors. Zooming into our one-day chart, we can see the broader trend for Tesla over the past year. The stock has traded within a wide 52-week range of $182 to $488.54. Currently, it sits near the middle of this range, reflecting the battle between bullish recovery attempts and bearish pressures. Notice the significant decline in early 2025, followed by a bounce in April, only to face renewed selling pressure. A critical observation is the sharp drop on June 5, 2025, where the stock plunged almost 12%, hitting a low of $273.21. This could be attributed to the growing concerns over sales and competition, setting a new potential short-term support level. Let's focus on the period surrounding the recent week's sales news. On July 24, 2025, while some headlines reported an 8% plunge due to the earnings and sales data, our chart data shows Tesla closing down 1.52% to $305.30 for the day, following a 2.85% drop the day prior. This still represents significant bearish sentiment, and volume on these downtrend days was notably high, indicating strong selling pressure. However, the very next day, July 25th, we see a rebound, with the stock closing up 2.37% to $316.06, likely fueled by the LG Energy Solution battery deal news. This immediate positive reaction, despite the negative earnings sentiment, shows the market's sensitivity to forward-looking catalysts. Now, let's shift to the one-hour chart to examine the short-term price action and intraday volatility more closely. Looking at the period from July 9th onwards, we can clearly see the impact of the news events, especially the sharp sell-off and subsequent recovery. Notice the volatility around mid-July, then the pronounced dip leading into July 24th, followed by a strong recovery that's still unfolding. The hourly chart shows a battle for control around the $310 to $320 range. The sustained green candles and increasing volume during the recovery phase from July 24th to July 28th indicate a shift in short-term momentum. However, yesterday's candle, July 29th, shows a slight pullback, indicating some profit-taking or renewed caution around current levels. Drilling down to the 15-minute chart provides an even finer look at the immediate price action, particularly over the last few trading days. We can observe the high-volume spikes during the initial market reaction on July 25th, coinciding with the positive LGS news. The stock has been attempting to consolidate above the $318 support level since then, but has encountered resistance near $326, which was yesterday's high. This narrow trading range on the 15-minute chart, coupled with slightly diminishing volume in recent hours, suggests a period of indecision. A break above $326 on strong volume would signal short-term bullish continuation, while a decisive move below $318 could quickly retest the $310 area. Traders should pay close attention to the open and close of these 15-minute candles, as well as significant volume spikes, for clues on directional bias. So, what are the reasons to be bullish or bearish on Tesla? On the bullish side, the recent battery deal, Cathie Wood's continued confidence, and the ramp-up of the affordable EV model provide strong fundamental catalysts. Technically, the bounce from the $300 to $305 area in late July, which coincides with psychological support, shows resilience. If Tesla can consistently break and hold above the $326 to $330 resistance zone on good volume, it could signal a short-term rally towards $340 or even higher. For long-term bulls, the vision of broader EV adoption and Tesla's continued innovation remain compelling, but patience will be key. Conversely, the bearish case hinges on the declining auto sales, significant competition eating into market share, and Elon Musk's cautious outlook regarding profitability. The looming expiration of the EV tax credit could also put further pressure on demand in the coming months. From a technical standpoint, if Tesla fails to hold the $318 to $320 support derived from recent price action, we could see a retest of the $300 to $305 level. A decisive break below $300 would be a major bearish signal, potentially leading to a drop towards the more significant support around $270. This scenario would be reinforced by continued weak delivery numbers or a general market downturn. When deciding when and what price to trade, keep these key levels in mind. Immediate strong support for Tesla is around the $300 to $305 area, a level tested and held in late July, which is also a significant psychological barrier. Below that, major long-term support lies around $270, observed as a strong bounce point in early June. On the resistance side, immediate overhead resistance is found at $326, the high of yesterday's candle, followed by the $335 to $340 zone from previous resistance points in early July. A sustained break above $340 could target the $350 to $360 range, last seen in late May and early June. Unbiased short-term prediction: we anticipate Tesla will consolidate within the $315 to $330 range over the next few days, with a 50% likelihood. This prediction is reinforced by the mixed fundamental signals and the current indecisive price action on the shorter timeframes. A potential breakout above $330 has a 40% likelihood, contingent on positive macroeconomic news or further strong, specific catalysts from Tesla, such as accelerated affordable EV production announcements. Conversely, a breakdown below $315 has a 10% likelihood, which would be reinforced by any further negative news on sales or a broader market correction. In the coming weeks, look for official Q3 guidance from Tesla's management, any concrete updates on the new affordable EV rollout, and developments regarding the federal EV tax credit. Monitoring competitor performance in key markets will also be crucial. That's all for today's in-depth analysis of Tesla. If you found this video helpful, please like, subscribe, and hit the notification bell so you don't miss our next breakdown. Let us know your thoughts on Tesla in the comments below. Thanks for tuning in to Explain the Charts, and happy trading!